Next question. What is your outlook for your asset class, so infrastructure or UK healthcare real estate? And where are you seeing the greatest risks and opportunities? And I'm going to ask that. I'm going to kick off with Ed.
I'd start by saying that despite some of the volatility that we're seeing in the broader market, conditions do remain very supportive for infrastructure investment. So I'd say put that right at the top. We're an income-focused investor. We invest predominantly in operational assets. So we're not strictly reliant or dependent on new infrastructure being developed. There's plenty of assets already in existence, but certainly new assets feed into the investment universe for the company for future years. And so we are very much correlated over time to how many new assets are being created. And there's some exciting trends in that respect. Currently, we do see significant opportunity to add assets to our existing high quality portfolio. And we're seeing those really right across the breadth of the core infrastructure landscape. And that's spanning both traditional infrastructure sectors, so things like transportation, social infrastructure, as well as those sectors that underpin the more modern economy. And in this latter group, we'd highlight in particular some of the macro trends that are driving investment in communications infrastructure. So, for example, things like fiber to the home, mobile towers, as well as the energy transition. So electricity wires, district utilities, district heating. And importantly, assets in these themes are increasingly within the core infrastructure segment. So high quality cash flows from essential community assets with quite defensive and protected market positions. And we expect that these macro trends will continue to drive high quality core infrastructure, and they're certainly featured in HICL's strong and visible near-term pipeline.
Thanks very much, Ed. Giles, what's your outlook for infrastructure? Where are you seeing the greatest risks and opportunities?
I mean, it's been a great journey, isn't it? Because the first infrastructure trust was listed back in 2006, I think, on the London market. And now the infrastructure sector contains, I think it's 30 plus different investment companies focused on infrastructure. So the sector has grown hugely over the last few years as people have realized the value of infrastructure assets of all sorts, not just the sorts that we deal with, but sorts which have higher risks and potentially higher rewards too. So, how is that journey going to continue? And I'm pretty positive. I'd share a lot of what Ed said. I think that there are some big trends out there which mean that the governments are going to continue wanting to see new infrastructure developed, and those are driven by a variety of things. Decarbonisation obviously is one, changing modes of transport. If we move to electric vehicles, then obviously everyone realises we need electrical vehicle charging networks. So there's some big trends around that. Demographics, aging population. I'm sure Andrew has that very well covered indeed. But it's even down to just the expectations of our communities. I think as our societies get richer, their expectations grow. So I think the need for new infrastructure is pretty certain. You also asked about risks, and we are in an investment product. We'd see ourselves as being low risk because of that government backing we talked about earlier on. But if you're going to ask me to identify a single risk at the moment, it probably is a financial risk, which is that it's one which probably affects all real assets, which is if we do have higher inflation and that filters through to higher long-term interest rates, materially higher interest rates, then ultimately that must have a negative impact on valuations across real estate and infrastructure.
Thanks very much, Giles. And Andrew, what's your outlook for UK healthcare real estate? Where are you seeing the greatest risks and opportunities?
I spent an earlier part of my career working in emerging markets, and I'm not sure that's changed. I think globally, in the UK too, the emerging market is the aging population. And that creates all sorts of problems and challenges that many societies are facing, also opportunities. So we can go on growing, doing exactly what we're doing, as long as we demonstrate what we're doing with our shareholders' money is accretive and reducing risk through more diversification. We're very confident we can go on doing that. But we are looking ahead, asking ourselves two questions. The first is we proved to be pretty resilient. The pandemic was a very testing period, and we and our tenants were much more resilient than some people expected. That was good, but how can we build on that resilience? What have we learned? Because there are going to be future problems. We now have the inflation's replaced the pandemic, and something else will replace inflation. There's always going to be some big headwind we're all confronting. So how can we build on our resilience? And the second thing, we're now hopefully, I hope the pandemic is now receding, and we're not going to be overwhelmed by another wave of it. We start moving around the world again. We're keen to learn who in the world is best at looking after people with dementia, which is basically what our tenants do. What can we learn from other countries? How can we do a better job than is currently being done in this country, and how can we improve? There's lots of exciting things happening with technology now. Most of that doesn't require or need a change in the built environment, but hopefully a care home in 10, 20, 30 years' time will look very different to what a care home today looks like. And we want to build and own those assets.
Do you know what, Andrew? That sounds really inspiring, actually, that you're looking internationally to see who is best looking after people with dementia overseas. I really wish you the best of luck with that.